All right, welcome to the Bitcoin Analysis Show with Sami Loyal. This is a very, very exciting episode that we have right here on the Financial Summit YouTube channel. Welcome to those of you that have tuned in live, and shout out to those of you that are watching the recording. As usual, if you like my stuff, you'll want to see a little bit more of me, you can find the links to my channel in the description down below, where you're going to get much more of my stuff around the clock on YouTube. But this is a very exciting bit of price action because we've got this critical zone of support here at $60,000, which Bitcoin slipped below. And we've managed to now come back up into what could be a very dangerous bear trap, or we could have just had a deviation where Bitcoin's now back in the range and it's just back to business until we get that potential breakout above 70K and go off to the stars. That's basically the main question that's worth discussing in this video, I think, today, because we've actually done something very similar to a previous deviation Bitcoin has produced. And I want to show that to you. This is actually something that we saw back in January of this year. And it was right here where Bitcoin had this really nice sideways trading range. Basically up until the ETF hype, it lasted 34 days. And then we managed to get one rip up. This was a deviation. We came back into the range. We got a rip down. This was a deviation. We got back into the range. And then it was off to the moon. So that was absolutely fantastic. Now, if we take a look at these two bits of price action close up, you're going to see some very interesting similarities. We've got over here back in January a quick rip down, followed by a quick recovery and then consolidation, right? So here we had a quick rip down. It wasn't particularly quick on the way back up, but we did move up, followed by some consolidation. So move down, recover, consolidation. Move down, recover, consolidation. And then we saw the big move up where the pump just, absolutely didn't care about what happened before. And we ripped from $39,000, $40,000 all the way up to $42,000 very quickly, like basically within a day. And here, very, very similar. We've ripped from 59K straight up to $62,000. Again, basically in a day. This was within just a matter of a few hours here, which is very, very interesting price action, strongly indicating that we're following in exactly the same footsteps of our previous deviation here. And again, like I said, the rest was history. We did end up rallying back up to the 60, 70K area, and we actually set all-time highs right after this deviation. This was the low that triggered it all. So are we looking at the same thing right now? That is obviously the big question. Honestly, a lot of you have probably already made up your mind, but I want to help explain both sides of the story here just so that we don't get carried away, because one of the big things I've been seeing, and I'm very interested in things like sentiment, right? I'm very interested in what is the sentiment of the market? What do people behave? Or what is the behavior of people right now? And more importantly, how does that polarize when we reach support or resistance levels? Because in my experience as a trader, and I've been trading for 7 years now in the crypto market since 2017, one of the easiest ways I've ever made money is simply by observing that a lot of people get way, way too overly bullish or bearish at a support or resistance level. That's a really, really interesting mix, right? Where and the example now is resistance. So we're going to run with that just so I can make the point easy to digest. Where we've got a very, very interesting situation where people, in my experience, where I've always made the most money, would become the most bullish, the most explosively excited, taking their McDonald's outfits out and throwing it in the trash, turning the lights back on, turning the music back on, getting the models back in the club. Everything gets super, super polarized and super excited at resistance. That's what I've seen many, many times. And it's exactly what we could be heading into right now. The reason I'm saying this is because this entire zone, until we get above this yellow box here, and I'm going to talk to you about that in just a couple of minutes in this live stream, this entire zone that Bitcoin is in is now an area of resistance. We were using this area as support for quite some time. It lasted actually a very long time. Since the point that we got above this level until the point that we broke down, it was 61 days. That's over 2 months here that Bitcoin was able to enjoy support off this kind of rough 60K, 59K zone of support. And since then, we felt fairly fairly low below this particular area. We had a nice drop below this area, depending on where you draw it from, potentially like 6-7% down. And now we're recovering back up right into the same range. In that way, it's actually different to this deviation because this deviation was a 6% move, still quite sizable, actually very, very close. But coming out of very different circumstances, right? Before we had the big deviation up, we don't actually have that deviation right now. This was actually probably the single biggest difference because Bitcoin was actually very neutral when this deviation here happened. But over here, I think Bitcoin has printed, a much nastier set of price action here, where we've generally been setting lower highs in the market, and of course lower lows in the market as well. We didn't quite have that kind of setup taking place in this market here. It was just very neutral. And then, we grabbed some liquidity up here, stopped some traders out. Anyone that was short gets stopped out over here. Anyone that's long gets stopped out over here, and then back to business, right? Super, super typical for Bitcoin. A little bit different here, a little bit different. Right now, it's actually mainly people that are going long that are getting screwed in this market because we're trending down so much. Although there were a lot of shorts that got liquidated on this move here. And again, that's what I think is worth kind of drawing a bit of attention to at this stage, because a lot of the time with price action like this, what you're really seeing and what you're really expecting, if things are going to move the way you expect, which is that resistance is resistance and support is support, is you're going to start to see that people who went short over here are getting their positions liquidated. And that's exactly what we've seen here. So we're really fulfilling a lot of what we would expect if this market does end up continuing to drop down. And that's before we actually start taking some really nice tools up on this chart and taking a look at, for example, the fixed range volume profile. I think this really tells us a lot. This yellow box here lines up with a big spike on the volume profile. The next yellow box is the same thing. That's why I've drawn these two lines. But also this exact blue line now where we're trading at right this very moment is the value area low on this fixed range volume profile. And I think that really tells us a lot about where the resistance is on this chart. This is an area that people are rightfully going to be considering selling their Bitcoin here. And of course, this is after we've already collapsed below this area. We know that there's no real support for Bitcoin until we drop down to that 52K area at least, if not significantly lower down to the 44K range. And the fact that we saw this bounce kind of seemingly coming off the middle of nowhere. And by the way, we can trace this back just, if we're curious, just to see what this level did represent back in 2021. And it's okay. It's definitely a level that had some important reversal price action taking place. And that's what we're looking for. We want to see big reversals coming off these levels to validate them. It's okay, right? It's not bad, but it's certainly not great. But if we do take a look at where we have managed to bounce off, it's just putting us right into like 3 different zones of resistance. And I think that is what's really important to be keeping in mind at this stage in the market. I actually think that a big reason for this move is the S&P 500. The S&P 500 gapped up today. The Thursday close was sitting at about 50.67, but 50.64. But the open today on Friday was 51.27. We saw a big gap up on the S&P 500, and that could be for a multitude of different reasons that I'm not going to go into. But I think one of them was speculation that we're finally going to start to see interest rates cutting down this year, right? And I think that's why we've also seen the dollar react the way it did, where the dollar dropped. But again, this is where I'm going to pull in these same ideas again, because it might be wrong, but it's about general practices of what actually serves you really well. For me, falling down to areas of support is where it makes sense to start getting bullish again, right? And on the flip side, for the S&P 500, rising up into pretty much its only valid area of resistance on the entire chart above the previous all-time high at 4,800, rising into resistance areas is where it makes sense to start getting bearish, especially if we know that this is happening within an existing correction. This is the first correction the S&P 500 has had since July of last year. That's a very long time ago. Okay, the last time that we triggered a correction, from today was 282 days ago. From this point, it was an entire 234 days, which is like 7-8 months ago, by the way. Like, I mean, a very, very long time to not print any sort of significant correction. And the most that we saw, between that was like a 2.4% drop, like really nothing big at all. So, to me, this is just, the existing 6% drop from high to low. This has been a 6% drop. The existing 6% drop, seeing a bit of a, climb back up, a slow climb back up, potentially ready to capture some resistance and then send it back down. That's what I'm seeing on this chart right now, because this support level at 4,800 remains untested, and this was the S&P 500's previous all-time high, right? So it's not something that I think, that I could easily ignore or just, kind of brush off like it's not a big deal. And we can also throw a Fibonacci on here, and it lines up really nicely with that all-time high level, right? Take a look at this Fibonacci from this low that the S&P 500 punched in October of last year, right up to the all-time high that we punched in April, March of this year. The 382 retracement sits very happy right here at the previous all-time high. It's worth noting, for those of you that don't really use the Fibonacci but have some basic understanding of it, that the 382 level and the 618 level are mirrors of each other. And that's why they're so important. That's why they're both so important, because the 618 is super important. And if you just flip the Fibonacci around, you're looking at the same price level anyway, right? So very, very important Fibonacci level there, lining up with the previous all-time high for the S&P 500, and a beautiful setup for it to continue to come down anyway. To me, this is not to be ignored. This strongly implies that, yeah, sure, we might have a literal 1% more of upside for the S&P 500, but if this continues to correct, and like I said, this previous correction, I've said this before, 11%. So far, we're down by 6%. If we fall down to that all-time high, we're down by 8.5%. It's very much in line with what the S&P 500 produces if it manages to get back down to that previous all-time high. And right now, it's just a very typical reaction rally for the S&P 500 before continuing to drop down. Now, could it be a situation where the correction is over and we're back to the staircase to heaven? Yes, of course. It could be that situation, and absolutely anything could take place. But for me, it's about just kind of, paying attention to, look, what is more likely to play out right now? And for me, the fact that the correction has already started, the fact that we're just kind of like slowly grinding up, but the move down has been much quicker than the recovery up. To me, these are the key characteristics that show that this downtrend is going to continue, and it hasn't quite fallen down to where it should do anyway. And so that's worth keeping in mind at this stage in the market, right? Again, how does that reflect on Bitcoin? Well, naturally, Bitcoin is going to be dependent on the happiness of traditional finance, right? If Bitcoin doesn't have the blessing of traditional finance being in a bullish, positive place, then I don't think Bitcoin is going to be an interesting asset for people that want to speculate, because you don't want to speculate if you're losing money, right? If you're losing money, you want to get tight and you want to get a little bit more, careful with where you put your capital. And naturally, an investment like Bitcoin, which is actually very risky, it's considered a risk on asset, is just not going to be very attractive to you. And I think that's what we're seeing here. If we take a look at other things like Total 2 and Total 3, you'll start to see that crypto hasn't even, managed to get above some of its recent areas of resistance, right? Bitcoin has managed to climb back up, but crypto, excluding Bitcoin, hasn't done particularly well. And it just gets worse if you look at Total 3, by the way. Bouncing off that Fibonacci retracement, which is very, very cool, but still nowhere near the comparative levels for Bitcoin, right? Bitcoin's already gotten back above 60K. The comparative level, for the altcoin market might, and this is, again, very subjective, but it might be up at about 689 billion, and we're nowhere near that right now. So I think that really tells you a lot about where the market is in terms of like not really producing a recovery yet and falling below key levels, and now literally being a key area where back tests tend to get very, very hairy. And I think it's just worth looking at things like the fear and greed index, right? Yesterday we saw a beautiful reading down at 43. This might not be something that you swear by, but it's definitely something that I like. We saw a reading of 43, and the last time we had a reading that low was in October of 2023, and that's when Bitcoin was trading at $27,000. So very, very nice reset here. But if we start to see that people get very bullish again, and again, especially if it looks like that's starting to happen when we're at resistance, to me, it's just one of those things where I'm like, look, 10 times out of 10, I'm going to quite confidently say, you know what, you guys are probably on the wrong side of history here. And I'm quite happy to be a lot more bearish where you guys are getting bullish, because I do get bullish at support levels, and believe it or not, I do get bearish at resistance levels. It's just something that served me particularly well throughout my journey in the market. And so that's something I'm going to keep doing, right? So if we start to see that sentiment continue to get polarized, and again, we're going to see that with metrics like the fear and greed index, we're going to see that with just things like Twitter and whatever it might be. Those are going to be things that I'm very interested in paying attention to in the market. Ladies and gents, that is all that I have time for in this live stream today, though. So if you have tuned in live, thank you all very much for joining me here. If you're watching the replay, then shout out to those of you that have come in and watched this video here on the Financial Summit channel. I'm going to be here with you guys on the Fridays. I've got my dog just on my arm right now, looking for attention. And I'm also here with you guys on Monday with Mike. So that is a super, super cool show. Check them both out. Obviously, you've got a lot of content around across the week on the Financial Summit channel. If you want to watch more of me, if you want to see more of my channel, my own analysis, then you can find that linked below. I'm super active on that channel. You can get a lot more of this. But if you have enjoyed this one, you know exactly what to do. Hit up the likes, subscribe to the Financial Summit channel, and I'll see you all on the Monday show. Cheers.